I've seen what happens, and with my friends that did do that, I see what happened to them, and it didn't happen to me. I wish I could go back and tell myself, hey, don't do that. Don't buy a car. Don't, go out to dinner.
If I would have known even half of what I know now about the VA loan, there's no telling where I'd be right now.
I'm like, man, if I had just been buying houses in Phoenix when I was there in 2011 for 120 grand, things would be different. You won't even have to work. If I had done all that, buy another rental property, and in 10 years, you'll be...
Welcome back to the Navy Nuke Network Podcast, where we help Navy Nukes like you navigate the transition from military life and build the future you want. Whether it's career, education, or finances, this show is about real-world guidance from people who understand what it's like to walk in your shoes. Today, we're starting a new mini-series on one of the most underused but incredibly powerful benefits available to veterans, the VA home loan. And this isn't just about buying a house. This is about understanding how to use your VA loan strategically, especially as a Navy Nuke who's earning more, promoting faster, and building momentum earlier in your Navy career. Most Nukes don't realize how strong their position is. You've got income, bonuses, and stability that give you options most people don't have. And if you're smart with your benefits, you can build real wealth before you even leave the service. Joining me today is Jon McIntosh, a VA loan specialist who works with service members and veterans every day to help them get the most out of their VA loan. He's seen the good, the bad, and the missed opportunities, and today he's breaking it all down for you. This is episode 1 of a multi-part series. Today we're covering the fundamentals: who qualifies, what the key benefits are, and why this benefits matters more for Navy Nukes than almost anyone else in the military. Let's jump in. Hello everybody, it's me, Justin Woodall. I'm alone here today. Caleb's not with us. He's actually out of the country. He's on vacation, so we're letting him enjoy his time. With me, I have Jon McIntosh. And before we get started, I'll have Jon, you go ahead and introduce yourself, and we'll get going from there.
Thanks, Justin, for having me. I'm Jon McIntosh. I'm a mortgage broker out of Northern California, but I'm licensed in multiple states and have relationships in all 50 states and deal with a lot of military members in the Navy Nuke program, as well as all other parts of the military. Both my grandfathers served as well, and my best friend from high school actually was a Navy Nuke, or is a Navy Nuke. I guess you are always a Navy Nuke.
That's right, yeah.
Yeah, you don't get out of that, I guess. So
once a Navy Nuke, always a Navy Nuke.
Right, yeah, kind of like a gang. So anyways, I'm haven't gone through it myself, but watching him go through it, I'm somewhat familiar with, the process you guys went through. He lived with me when he went through boot camp or before he went through boot camp and got recruited, he lived with me, and I watched him decide to sign up and go through all that and then, complete nuke school. So, but,
and for all of you watching, I have taken Jon through, not the ringer, but I have given him a thorough background of what Navy Nukes are, how we get to where we're going, our specific financial situations, and how that goes. Jon and I actually met, I guess how I knew Jon first before he knew me. I was in the Skill Bridge program when I was transitioning out of the Navy, and I did my Skill Bridge through a company called Allegiant Vets, and Jon is associated with Allegiant Vets and his presenting to everybody that's in the Allegiant Vets Skill Bridge, because they do kind of like a weekly Zoom call. There's hundreds of people on the Zoom call, and they teach us stuff that you didn't necessarily learn in TAP or in transition classes or anything that you're doing while you're getting out. It's supposed to be they call it tap on crack, right? So you're learning stuff into the weeds and really understanding your transition. And Jon, you can probably talk to that and say how you became a part of that and your experience with working with veterans and their transitions out.
Yeah, absolutely. So I've always liked VA loans. Some people, there's more complexity to them. There's more inspections, and the appraisal process is totally different as far as on the loan side. But I've always enjoyed doing them. I've always enjoyed, working with service members, first of all, because they're service, and second of all, just because, there's a lot of very interesting people I've met through doing VA loans in general. So I switched to this office that I'm in now, and the realtor in this office, his brother actually runs the Allegiant Vets program, and they were having issues with getting, loan officers to show up to the meetings, follow up with people, treat people the right way after the meeting. So they invited me about 18 months ago to get on a phone call about an hour, or get on a Zoom call with 800 people about an hour before it was going to happen. And so I showed up and basically had no prep time and did it. And then the rest is kind of history. And so now every Tuesday we talk to between 400 and 800 people that are going to go through the Skill Bridge program. And then once a month, we go through what we call Empowerment Week, where a bunch of us present and go through a pretty thorough, hour-long presentation and really get kind of more into the weeds about the VA loan and the benefits of that and what you can do with it and how you qualify as you transition out of the military.
Yeah, that's what really caught my attention, because when I was going through SkillBridge, I started December of 24. And when he says 400 to 800 people, he really means it. Like, there's literally 800 people on some of these calls. It's crazy. But
yes.
I was able to hear Jon's presentation more than once, talking about a variety of things over my 4-month SkillBridge. And as you all know, like, I started my YouTube channel and started the Navy Nuke Network and finally got it public starting in like February, March, somewhere in there. It's been a few months. And I thought that he's a subject matter expert when it comes to VA loans. I know for me, my boot camp self, a 22-year-old Justin joining the Navy, if I would have known even half of what I know now about the VA loan, or even like if I knew somebody like Jon who was teaching stuff like this to me even back then, like, there's no telling where I'd be right now. Like, my family would be in a whole different financial class. It's a whole different situation, because it's such a huge perk, and a lot of us don't really understand the ins and outs of it, and it could really be a game changer for our lives. And that kind of takes me into why I wanted to bring Jon on the podcast in the first place. And that's because us Navy Nukes are different, right? We're financially different than the average person joining the military or going through the military getting out, because of our incentive pays, our bonuses, our ranking structure, how we like advance relatively quicker than our peers. We can be at a younger age much higher in rank and much higher earning potential than somebody else at 22, 30 years old, depending on where you are in your military career. And I've gone over that with Jon. And would you be along the same lines? Like, you agree with that?
Definitely. And I mean, through Allegiant, I've dealt with multiple people that are separating from the military that are in, Navy Nukes, or, there's certain positions in the Navy and the Air Force, and, there's a different individual than just, the rest of the branches or positions, etc. So 100% agree. And, also I'm 37. I wish I could go back and tell my 22-year-old self, because I got out of college, got in the mortgage business. That's right when things kind of turned around after the '08 blow up. And, I wish I could go back and tell myself, hey, don't do that. Don't buy a car. Don't, go out to dinner. Like, buy another rental property, and in 10 years you won't even have to work. If I had done all that, what I think of now with perfect 2020 hindsight vision, I'm like, man, if I had just been buying houses in Phoenix when I was there in 2011 for 120 grand, things would be different. So that's what I'm excited about with this too, is for those of you guys that listen to us old guys, you'll be happy you did. And people were telling me the same thing, and I didn't listen, or I listened to some of them, but not all of them. And, if I'd listened to all of them, the guys that knew, I'd be in a different place also, and so would Justin. Anyways, hopefully for those of you that do listen to us, in 10 years, you're going to be like, man, I'm glad I listened to those guys, because now my life is different.
Absolutely. I've even gotten in trouble by my wife recently, because we're actually in the process of buying a house, and Jon knows that. But I was visiting some house a couple weeks ago, and the real estate agent was there with her significant other, and it was like a young couple. I don't know, she's like early 20s, I guess, straight out of college maybe. Anyways, her significant other was in the Marines, and he was telling me, oh, I've been in for like 8-10 months, something like that. I don't know. And me and my buddy of mine, another Navy Nuke also, we just ended up talking to him the whole time, because we were talking about like investments and real estate, and like, because we were talking about the house that we were, standing in, and we just started giving him like, hey man, you're in a good spot. You need to start doing this now, like real estate, blah, 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 investing. And he was like, he seemed to be taking in what we were saying, right? But my wife was like, oh my God, like, why is he talking this kid's ear off? He's like an old man, like trying to impart wisdom on the generation that doesn't want to hear it.
I know. But you do it. It's just what happens. Yeah. Because you're like, I've seen what happens. And with my friends that did do that, I see what happened to them, and it didn't happen to me. So, yeah.
All right, so let's go ahead and get into it about like just VA loans. Let's build from ground zero what the VA loan is, like the basic eligibility. So who qualifies for a VA loan?
So if you're in the service and you're deployed after 90 days on active duty deployment, you are eligible at that point. So, and then if not, I want to say it's 2 years of just if you're, in the States, non-deployment, it's 2 years, and then you would be eligible to use the VA benefit. Or if you got, obviously if you got medically retired, I think they, you have to check with your Certificate of Eligibility, but I believe that would qualify you as well, because I know a couple of my friends who didn't spend 2 years that got medically disqualified after they got entered that are still eligible. But anyways, so
don't be bringing up terms that we don't know yet. So it's Certificate of Eligibility. Some people may not know what that is. What is the Certificate of Eligibility real quick?
Sure. Yes. Yeah. Sorry. Yeah. Certificate of Eligibility is something that we on the lending side, you can pull it too, basically tells us how much VA loan entitlement you have. So you can actually have more than one VA loan at a time, depending on where you purchase and how expensive it is. So there's a certificate online that we pull that tells us how much you're entitled to borrow. So if you have never had a VA loan, you have full entitlement. If you've had a VA loan, it'll tell us how much you've used and then how much you have remaining. And then also when you exit the military, if you're receiving VA disability, which would exempt you from paying the VA funding fee, which I'll go over that in 1 second, that would show up on there as well. So if you don't have VA disability when you exit the military and you want to use a VA loan, then you do have to pay the VA funding fee every single time you do either a VA purchase or a refinance or a streamlined refinance, which is just a refi specifically for veterans. That makes it very easy and simple for them to lower their interest rate. So if you are receiving a VA disability rating, when you exit, you are exempt from paying that fee, which becomes a pretty big deal when you are going to use your VA loan multiple times throughout your life.
When you say the VA disability rating, that means 10% or more, right?
Yes. Which in my experience, I have not seen anybody get a rating below 10%, but yes, technically speaking.
I don't think I have ever. I don't think you can get below 10, but
I mean,
still,
most of what I'm seeing now is 50+% is what I see most of the time now, and a lot of hundreds actually, which I think is great. I mean, when I got in the business in 2011, I would say a quarter of the veterans I dealt with had a disability rating, and now I'm very surprised when veterans don't have any at all. Like most, I would say most have at least a partial disability rating. The 100% is still not super common, but, I'm glad to see that the military is actually granting those disability ratings to those, people that have served that should be getting that, especially those that, were in combat and things of that nature. Even 15 years ago, that was much harder to get approved than it is today.
Yeah. I think there's a lot of good resources out there now to help us understand, getting through that VA process. And I have podcast episodes coming out talking about that stuff. So
huge.
Yeah. That's a whole nother aspect of things. Yeah.
Yes. For those of you who are thinking about whether or not to do that, it's a big deal when it comes to the VA loan. So, if that's something that you're thinking about doing, I highly encourage you to do so. Go through the process. I know it's probably not fun.
And you said it's a big deal with the VA loan. We'll just cover this really quick. With your VA income, because it's not taxable, right? Because we know that our VA money that we get as payments is not taxable. So that makes it a little bit different when you talk about like calculating income, right? When it comes to your income proving to you guys, like how do you use that and what do you do with it?
Yeah,
we don't have to go like too far into it, but
it's very simply, that's the only type of income basically. I mean, I guess there's technically other ways you could have non-taxable income, but it's very, very rare. Because that's non-taxable, we actually use more than you receive to qualify you. So for instance, if you're getting $4,000 a month, we're going to use a figure of 125% of that, which would be like 5,200. You guys can correct me and get your calculators out. But yeah, we're going to use 125% of what the military is actually giving you to qualify. That income will actually qualify you for more than it would if it was a taxed income, long story short.
Yeah, that's something that in my process right now, because I do have a VA rating now, something that I was able to figure out and get that done. So it definitely, when you have that income anyways, add it to your W-2 income if you have it, or retirement income if you're retired. It's a game changer.
We've had tons of clients that, just from their military pension, because they've served for long enough, plus their VA disability rating grossed up by 125%, qualify to buy houses all over the country. I mean, it's a little trickier in more expensive states like California, New York, etc. But, you could potentially have zero job and qualify for a house as soon as you get out.
Yeah. And you said like rare instances with non-taxable income. Another non-taxable income that I know of would be something like getting your post 9/11 GI Bill, like getting money for that you cannot use towards your income. Is that correct?
Yeah, so
Because
GI
it's not
Bill,
it's not, guaranteed.
it's not guaranteed. Yeah, so anything that's not guaranteed or considered temporary income is pretty tough to use because if you quit going to school, that income would shut off. So that unfortunately can't be used. A lot of people are misinformed and think they can use that, which they cannot.
All right, cool.
So,
I know that somebody's going to ask that. I asked that myself. I was asking that too when I was trying to go figure out my income for buying my next house. Now, let's go into, we talked about entitlement. Entitlement can be a little bit of a tricky concept to grasp, I guess. Mm-hmm. Is there a way that you might be able to explain it that, because like your entitlement comes from the VA loan being a whole separate like lending option, right? Because it's like backed differently than a normal conventional loan. So could you maybe explain that a little bit?
The VA loan is essentially the VA is insuring these loans is the easiest way to think about it. So they are basically an insurance policy to the lenders because you guys are putting no money down and you don't have PMI. So basically the VA is paying the PMI that normally would be on like a conventional loan. PMI stands for private mortgage insurance. If you're a civilian, non-military, A, you can't put down 0%. B, if you put down 3%, which is the minimum, you have something monthly called private mortgage insurance. Private mortgage insurance is basically an insurance policy for the mortgage company. So if you default because you don't have a lot of skin in the game, they get paid back a percentage of that loan amount. So if that loan amount's like $400,000 and you have PMI and you go, hey, I'm giving you the keys, see you later, then that PMI policy is going to reimburse that lender probably around 25%. So they're going to get $100,000 from a PMI policy to reimburse them so that they, don't lose when they go to sell that house. The VA, there is no PMI. So the VA is basically insuring those loans. And so because of that, you have the funding fee if you're not receiving a disability rating. And then you also have a maximum eligibility because they are basically like an insurance. So they don't want to have you taking out 25 VA loans where they're on the hook for 25 houses. So it's a little bit complicated as far as like people always on the calls with Allegiance and just in general, like, well, if I buy a $300,000 house, how much can I spend? Well, the problem is the VA has a calculator and we have to go in there and put your exact parameters on what county you bought your house in, what was your loan amount, what county are you buying the new house in, etc. And then the calculator will tell us this veteran can purchase another house for $300,000 with zero money down, or they can purchase a house for $450,000 if they put down $30,000. Like comes up with these weird calculations. So it's very hard to tell someone, hey, you can buy 2 houses for $500,000. Maybe you can in California. Definitely can't do that in Mississippi, for instance. So we do that calculation for you when we have a consultation about if you have a VA loan now, then we tell you, here's how much you can spend based on where you're planning on purchasing if you're going to keep your existing house.
Yeah. And the entitlement portion, it's kind of, what he's saying is confusing using calculators and stuff like that. And you can also see, like when he talked about earlier, the certificate of eligibility is going to show you how much entitlement money you have, period. Like if you've never used a VA loan, obviously you have all of it, but it'll tell you like how much you have. And then if you've used it once or more than once or whatever, it'll show you how much you have left. Now, how much you have left doesn't mean how the price of the house that you can buy, right? So if you have like $100,000 of eligibility left, that doesn't mean you can only buy a $100,000 house.
Correct.
It's talking about that whole financially backed, insured from the VA type money. That's what they're talking about. That's something that I thought was a little bit confusing because I was like, oh, why does my certificate of eligibility say, like in my case, for this next house is like $196,000 or something like that I had. And it's like, man, I can't buy that where I'm at right now, like $196,000. Then after like researching and talking to people like John, I figured out like, oh, that's not what that means. It's just talking about like the insured entitlement side of things. And you talked about, John, how we don't have down payments with the VA loan, which I mean, it's obviously one of the coolest like cheat codes in all of investing, in my opinion. But is that necessarily something that you think people should stick to? Or do you see in situations where you might want to, or there's an advantage to it, or it makes more sense to put some money down because you don't have to, but in some cases you can, like you were just saying earlier, like if you put $30,000 down on whatever XYZ. In your experience, what do you think about that?
Yeah, I mean, definitely if you're using it for consecutive times and if you are not going to have a disability rating, it significantly reduces your funding fee if you do put 5 or 10% down. I mean, if you put 10% down, your funding fee on subsequent use goes from just over 3% down to 1.25%. So, just for some quick math, let's say it's basically for every $100,000 you're borrowing, if you put no money down, you're going to pay $3,000 for every 100 grand you're borrowing when you're using your VA loan for a second time. If you put down 10%, you'd be paying $1,250 in VA funding fee on what we call subsequent use. So that's probably the only time like I would highly recommend that, because you're just reducing, you're paying a little bit down, especially if you're, selling another house and you're rolling equity anyways, and it's not like cash out of pocket. And so, that would be a time where I would recommend doing that. If you were like, hey, I'm definitely not going to receive a disability rating, I would recommend putting 5 or 10% down to reduce that funding fee on your next transaction.
Yeah. No, I did. I paid the funding fee. I bought two VA loans in my career. This will be my third VA loan that I've used. My first, it progressively goes up every one you buy, right? Like it's like a certain, your first one is a smaller percentage, the funding fee, and then it gets bigger the next time.
And then it's the same.
And then it's the same after the second one?
Yeah. Mm-hmm.
Yeah.
Yeah, I think I haven't had one in so long. I believe it's 3.3. I'm going to Google that right now. VA funding fee, subsequent use. I want to say it's 3.3%. It's over 3%, I know.
Yeah. Yeah, it's luckily now I have that VA rating that we were talking about, so I don't have to worry about it, which is nice. But when you do,
it was 3.3%.
Nice.
Yeah.
If you don't realize that you have to pay that funding fee, and then you say like my last house that I bought, or the one that I'm in now, say I bought it, I did $292,000 was what I sale price of the house was, right?
Yeah.
And then I didn't understand the funding fee that much. I know I had to pay it my first
People
one, but
don't
it wasn't
talk
that
about
much.
it.
They don't talk about it.
It's rolled into the loan. Don't worry about it. It's easier to just not talk about it, is what people do. They're like, oh, it's rolled in. Don't worry about it. So
yeah. And then when it came down to signing day, and I see my loan value is over 300. I was like, what?
9 or 10. You probably must have 10 grand in there.
It was like 302, 303, somewhere in there. It was 292. What happened? But anyways, it just gets rolled in, which is nice. You get to finance it. But anyway, so keep your eye on that if you're trying to buy a house. Don't forget the funding fee if you have to pay it.
Yeah, I'm going to correct myself on the eligibility. I think reserves is 2 years was what I had in my brain. If you're active duty, it's 6 months. Apologize. I got my dates wrong on when you become eligible for a VA loan. If you're active duty, it's either 90 days at deployment or 6 months.
Right.
If you're reserve, I believe it's 2 years. I was thinking about reserves.
And I'm glad you brought that up, because I did write that down as a note here. Now, we've talked about the pipeline, the nuclear pipeline. I haven't really gone into the housing situation. Just real quick. I know you nukes understand that they're listening, but if you're married and you join the Navy, you can live, on base, off base, wherever you have family, right? You can do that. So if you're married, or I guess now you can join with children, so you can have a dependent or whatever. But for me, I lived out. I went to Charleston. I lived in on base housing, and that's fine. Whatever you could buy a house pretty much whenever after you meet that eligibility requirement as a Navy Nuke. But for those that aren't married, you have to live in the barracks, right? So you have to live on site, at the schoolhouse in Charleston. So you have to live in the little apartment type style suites where you have, 2 people in one room connected by a bathroom to 2 people in another room. So it's like that college dorm type situation. So you're like that for 6 months through A school and then through power school. And then once you get out of power school, that second 6 months of the training, you go into that third training pipeline, you do get the option to live out in town. And I do think at that point in time, because you do meet the minimum eligibility requirements, and if you were on top of your finances and understand what you're doing, and maybe you have somebody in your corner like John here, that can kind of help you plan getting buying a house during that time, even though you're technically planning on only being there for 6 months, because the next training pipeline is 6 months, you can still buy a house, right? And that kind of brings up the question for me, John. You can kind of explain the intent to be where you're at, because there's minimum staying in that house requirement, right? There's something like that for the VA loan that you need to uphold. And if you can kind of go into that and explain.
Yeah, basically any loan, actually. FHA, VA, conventional, doesn't matter. If you're buying a house as a primary residence, you're signing what's, essentially an affidavit stating I intend to live here for 12 months. Because, people do occupancy fraud where they buy a house with a primary residence loan to get a better interest rate. And then 60 days later, they have a tenant in there and it's really an investment property. So that's what you're signing an affidavit saying, I'm not going to do that. Now, if you're stationed somewhere and you don't know what's going to happen in the next year, you may stay there, you may get stationed somewhere else. Your intent was, hey, I was intending to live here for a year and then I got stationed somewhere else. That's something out of your control. Or, hey, I got married and my wife's family lives over here, so now we got to move. Or, hey, my wife has a kid and that kid goes to school in a different state, and so now we got to move over here. Like, you have to intend to live there, but there is multiple life circumstances that can cause you to not live there for a year. And as long as you have those things documented and they make sense, you'll be okay. It's just they're trying to prevent people from, I never intended to live here. I bought a primary residence and put tenants in it 60 days later because that's really what was my plan. So that's when you would get into trouble for doing that. But if you have some life event, death, divorce, sickness, kids, have to transfer schools, whatever, something that makes sense, you're okay. So yeah, if you're in the barracks and you're eligible to get a VA loan and you might get stationed somewhere else in the next year, but you don't know that for sure, you can totally buy a house. If you get moved, you get moved. Turn that into a rental. If you have eligibility left, buy another house later on. We have a ton of people in Allegiant Vets that actually, I'm shocked at how many people have become real estate investors and have built, real estate empires while in the military using the VA loan.
Yeah. So in this situation, like you said, you can intend on being there. I knew when I got to Charleston, and I love Charleston, I wanted to be there. And I said, when I get the prototype, I'm going to be a staff pickup. And a staff pickup means you can stay, instead of going to an aircraft carrier or a submarine for your first station, you could stay at the schoolhouse, the prototype, and be a teacher, an instructor for another 2 years before you go on to your first boat. You could have that intention. I know I want to be a staff pickup. There's also situations, for me, when I was going through, there was a lot of hold period. So when I got done with power school, I had a couple months before I started prototype. So that's a couple months. And then prototype's supposed to be 6 months. But then we had crazy backups in the pipeline time wise. So we had people that were ending up staying 4 or 5, 6 months longer than they were intended just because the pipeline was just kind of messed up. So they ended up staying there for a long time. Or you could be medically held up and you can get hurt or something. Or for me, I had a child during the pipeline and it, threw me back a class. There's a lot of different unknowns, different variables. But if you're a single person and you're able to live out in town, it's a good option. I mean, we're going to talk more. This is obviously a series I explained in the introduction. This is a series of discussions we're going to have, how to use a VA loan, especially when it comes to investing in real estate. But if you were able to house hack, which, there's plenty of people that need a place to rent because you're all not living in the barracks anymore and you all need a place to rent close to work or wherever. You buy a house, 3-4 bedrooms and then rent out all the other bedrooms for your roommates, or even get, if there was one available in Charleston, a duplex or something.
Oh yeah.
You could buy that and then live there during your prototype time. And then when it comes, like you said, you can make it into a rental. You said you see people do that all the time, right? So
yeah, the biggest thing, if I could go back to being 23, single with no kids and no wife that would, complain about living in a multifamily. If you can buy a multifamily when you're young, you'll be really happy when you're in your mid to late 30s because, you'll live for free. So, whatever housing allowance you have, you'll have that, plus your tenant on the other side is probably paying 2/3 of your mortgage in most cases anyways. And so you're living for very low. And then when you end up leaving that property or getting stationed elsewhere and you're renting out the other side, you might even be cash flowing, making money off of that property when you get moved elsewhere. And then if over, 10 or 15 year period of time, that might turn into, that thing just starts spitting off cash and you're starting to buy more and more properties because you bought that when you were 23 years old with no money down.
And we're going to dive deep. I promise you guys there's other episodes coming. We're going to go deep into how to do all that. But just as a, foreshadowing moment here, that is going to change your life. And especially if you can, I know prototype and the pipeline, there's a lot going on. I could be one that says that I was doing many, many, many hours of studying outside of normal study time hours and daytime. And I still now wish that I had set aside time to figure this out and be planning for this from day one instead of looking back at it like this. So next we can talk about other times when to buy a house. I know I've talked to you, Jonathan. Like, we're not talking right now to just Navy Nukes in the pipeline. We're talking to Navy Nukes that are all, either when they're starting, they're in the middle of it, they're transitioning out, they're, veterans. In that process of transferring out, we need to, I think they need to understand what that window looks like if they're trying to move, they're trying to buy a new place, they're trying to relocate, proving their income during that time, W-2 versus their military pay, stuff like that. Do you mind talking about that a bit?
Absolutely. Yeah. And that's honestly like why in Allegiant Vets, they moved me to talking to people every Tuesday, because on Tuesdays, they're talking to people who are not even in a skill bridge yet. Because I told Marcus Haney, who's the CEO, I said, hey man, some of these people were totally unaware that they're not going to qualify to buy a house once they set their retirement date in the military system. Like once you set that date that, hey, I'm not re-enlisting, I'm going to retire this date, your income is toast. We can't use it anymore. You don't qualify for a house. So that's kind of the biggest thing is I'm like, the further up the pipeline I can get to talk to people of, hey, you need to do a little bit of forward thinking if you want to be in a house when you exit that's not where you are currently. So yeah, once, if you have the ability to figure out where you're going to be when you exit the military, like if you're like, hey, I know my family's in Georgia, I want to live in Georgia, before you go and set your retirement date and go into a skill bridge program, I would try and buy a house in advance. Now, if you're deployed, you don't have to have a spouse occupy that property. If you have a spouse that can occupy that property within 60 days of you closing on it, you can do that. So you could be, for instance, saying, hey, I'm thinking about retiring. I'm in Texas. I know I want to be in Georgia. You could have your wife move into a house in Georgia in advance and then set your retirement date after you close. Because once you have that retirement date set, you then have to get a new job, have a new offer letter, be full-time, cannot be part-time. You have to meet a lot of requirements to then qualify to purchase a house once that's happened. So as far as, military pay, that's pretty simple and straightforward because you guys have, for the most part, been in for at minimum 4 years. And we only look at the last 2 years. And it's, W-2 straightforward pay. Or starting a new job and you're going to be less than full time, we have to wait 2 years to average out, if you're part time, what are we going to do? Like, we don't know if you're going to work 20 hours, 40 hours, 10 hours, so they want to have a 2-year history if you're going to be part time income. And then if you're going to go into sales or real estate or loans even, where there's commission involved, you're going to have a 2-year history to use any of that income too. So, also if you're going to go become self-employed, you're going to have 2 years of tax returns. Basically, unless you're full-time salary or full-time hourly, you're going to have, a pretty big stretch of time where you don't qualify to purchase a home. I just want to make sure I get that message out there because we run into people every week that are in our skill bridge program that are like, whoa, nobody told me this. Had I known this, I would have bought a house before I set my, separation to happen.
What we talked about earlier, that VA income too, you wouldn't be able to use it because you don't have a VA rating at the time, right? So you wouldn't be able to show, even if you were 100% and getting $4,500 a month, like you're still not going to be able to show that. And you don't have any retirement income.
We can use the retirement. We can use the retirement about 60 or 90 days before you actually separate. So the pension retirement income, we actually can't. We have a way to do it now. A lot of people will tell you that you can't. So we have like 50 different banks we use for VA loans. Some of them won't let us do it until you're actually receiving it. Some of the banks will let us do it. If we go online and through DFAS, we can actually pull a statement and we can say, here's what it's going to be and here's their retirement date. And some of them are okay with using that before you get it. Yeah. But if you call up, a lot of different banks, they're going to tell you, no, you have to be actually receiving it or we can't use it. But yeah, 100% on the disability. I've never seen someone get a statement about their disability rating and the amount that it's going to be until they actually separate.
Yeah. Yeah, there is something I've talked about in other podcasts, and we have VA people coming on, but doing the benefits due at discharge or benefits due at discharge, where you could, at 180 days, so 6 months from the time you get out, if you had absolutely every single thing lined up, ready to go, all your medical stuff, you file on your 180-day point, there might be a possibility that you get it a little bit before you get out. But even still, like, you're not going to have a rating until, the last month you're in. So we're talking about 6 months away. And if you've already declared that you're going to retire or separate or whatever, then, and you can't use your money and you got to wait till that the VA money comes in, and the retirement, you're not going to get that until, like you said, like 60 days out, 60, 90 days out. So there's going to be like this window of,
Yeah.
you don't know what's heck's going to happen, and you can't buy a house because of that, and you can't kind of plan that way. So,
Well, and it even makes renting hard too, because, technically, I mean, I guess you can show people pay stubs, and if they don't really dig, they'll, you'll be okay. But I mean, even, if you tell landlords, hey, I'm retiring from the military, I don't have a job lined up, you might even have difficulty renting. So, but your spouse's income can be used too. So like if your spouse is working, which we actually have a lot of people we talk to weekly that, their spouse is already retired military, actually already has a disability rating. Like I'm shocked at how common that is. Actually, that's really common. And we can use their income, whether they're a veteran or not, to qualify using your VA benefit.
Right.
So
that's,
for those of you
that's
that have
good
dual
clarification.
income.
So you said if you're the veteran, you're using their income, it's still fine.
That's fine.
Because you're still,
let's say your wife's
your name there.
Yeah, your wife's a nurse, you're a retiring veteran, you have no documentable income, but your wife, makes enough money to qualify for the loan.
Yeah.
We would put you on, you have to be on the loan because it's your benefit,
Right. Yeah.
but we can use all of your wife's income to qualify to purchase.
Yeah, that's
for
good.
Spouse who, significant other.
There's going to be a lot of people in this situation where they do have a spouse getting out at their, 10-year or further out point, 20 years. But because us Navy Nukes are kind of special, like we said, we have people that they do 6 years, 8 years, and then get out, and they joined us straight out of high school. So there's a lot of them too that are getting out at 24 years old, 26 years old that, still got a lot of life ahead of them, don't have a spouse. So just keep all this stuff in mind when we're talking about, because you want to set yourself up the best you can. And just honestly, like for me, because, obviously the Navy Nuke Network is something that I wanted to do for a long time. And I finally started it when I was transitioning out. And one day I would love for this to be my only source of income, right? But as a business owner, I knew that if I just tried to do the Navy Nuke Network when I got out, that I would have to prove 2 years worth of income to buy a house. And right now I'm wanting to, try to do that. So I was like, well, instead, like I could, because I have a W-2 income now. Like I work, I have W-2 income. We've already talked about all this. Y'all know that I have a job. And I wanted to use the W-2 income that I have now because I have it now. The plans for the Navy Nuke Network, hopefully it'll grow and blossom into something awesome. But when that time comes, I didn't want to already like, all right, well now, yes, I want to start the Navy Nuke Network. And I started, and then my life changed to where we need to buy a new house, and now I have to wait 2 years. So I was like,
I've been there.
What? Yeah, it's better to just...
A couple times.
And in my opinion, right now, it's better for me to just go ahead and, since I have the W-2 income, have that proof of income, buy the house now, so that when I make that transition later on down the road, I don't have to worry about it. My family is already in a new house, and we don't have to wait 2-3 years to get there. Next topic, I just have a few questions that I've got from people that they want to ask, and things that I've just kind of been jotting down as we're going through here. There's something special of VA loans when it comes to the rates that we get, the interest rates. Is that right? And could you explain
for sure
how that works?
Yeah, it varies, but in general, like I've been doing this since 2011. August is 14 years. So I've seen a couple of different market cycles. When I first got in, the VA rates were usually around 1% lower than conventional. During the pandemic, VA rates got the same or higher than conventional. We don't really know why, just what happened when we don't set the rates. I don't know what caused that. It just, for whatever reason, those were considered higher risk, or
hey man, it was crazy times, man.
Yeah, I mean everything was whack, like everything was backwards. So for a minute there, rates on VA got the same or higher than conventional, and then everything went back to normal about 6 months to a year after the pandemic hit. Things kind of went back to normal as far as that goes. So right now, VA rates are sitting almost a full percent lower than conventional. It's about 1/8% off from being an entire full percent. So this is June, and VA rates are sitting right around 6 to 6.3, depending on credit, loan amount. There's some different factors if you're going to pay points or not. So, that's kind of the range we're in today. Fortunately, we were, close to 7 a while ago. That's a huge advantage. I mean, 1% doesn't sound like a lot, but when you actually get a mortgage calculator out and do mortgage math, it is actually a lot of money, especially as you get into the bigger loan amounts. Like, I mean, the biggest VA loan I've ever done was a $1.5 million fourplex down in Los Angeles for a Air Force guy. And, a 1%, I refinanced him from like 3.5 to 2.5% back in the pandemic, and it saved him, a huge amount of money. We can do the math on that. But, Yeah, it's a big deal. So being 1% lower than the general population in interest rate, basically at all times, and then also not having that PMI, the combination of those two things means a VA loan is probably going to save you, 20% or so on your monthly payment between not having PMI and also the rate change if you were someone who was going to put down like 3% on an FHA loan. So it's pretty significant.
It's definitely even more checks in the pros column for the the VA loan over conventional.
And I think the other thing too is, like when you're young, when you're 23, I mean, you guys are a little bit different. You guys get these huge bonuses, which there's not a lot of jobs that you get those kind of tranches of cash that early on in life. For those of you that are in the Navy Nuke program, straight out of high school or shortly out of college, or you're in your early 20s. I mean, what did you were telling me? What's the first bonus? Like, did you say it was like 50 grand maybe or more than that possibly?
To join the Navy now, I wish it was like this back in my day, but the combination of all the bonuses, it's not one bonus, but you can get like a nuke bonus plus like shipping bonus and all that kind of stuff. You can get $75,000, which is what we're looking at. $75,000 to join right now as a Navy Nuke. A 17-year-old can get $75,000 to join, right?
I didn't have $75,000 in, any amount of bank account or anything until I was in my late 20s. And I went to college and got straight into finance and, worked pretty hard and took still a long time. That's a huge amount of money. That's just a join. At one time. Yeah.
Well, it's not all at one time. We do get it split out. Usually how the bonus structure works is you get like half up front and then they piece it out over milestones. So that first bonus that you get is a little bit different than what I just explained. So off of the milestones that you make through the pipeline, you'll get some of that, like 1/3, 2/3, whatever. But then at your 2-year point, which we talked about this before, it's like your star re-enlistment, like the first time you can like re-enlist or like add two more years. So you're already like 6-year contract, make it into 8 years or more. And that one is the one that you can get $100,000 there.
Yeah, so that's crazy. I mean, there's not a lot of things in life in the military or the civilian world where you're going to get access to that kind of cash that early and in that short of a time horizon. So yeah, like the earlier you can get invested in the stock market and the earlier that you can get invested in the real estate market, it's exponential when you look down the road at, 15, 20 years later. The people who did that and the people who didn't, it starts going like this, and it just gets worse and worse as far as, if you don't invest and you're not smart with your money, then in your 40s, you see people that like, how did they accumulate all that? It's like, well, because they started 20 years ago and it grew. No. So yeah,
the compound interest isn't no joke.
No, and it's boring for like 10 years. I was literally just talking to my friend about this and I was like, man, it just feels like you're doing nothing and like, oh, cool, my account went up $200, in the last 3 months. And then all of a sudden one day you wake up and it's like, okay, now, it's your account's changing by $1,000 a day, not $100 a day. So, but yeah, long story short on that is, you guys qualify to buy a house much earlier in life if you're young because your income is higher in the military. And then you get the VA benefit. And then where I was going with the cash thing is most people that I deal with that are non-veterans, the biggest reason they can't buy a house is because of down payment. It's not usually because of income. It's because for a regular 23-year-old kid to, save up 20, 30 grand to buy a house and they're making $20 an hour, maybe 25, even with the college degree a lot of times, they're out of the market till they're like 27, 28 because they just don't have the money. You guys don't have to put the down payment down. You have really stable income. You can basically guarantee that your income is stable by re-enlisting if you're worried about that. So that's just a huge advantage. You guys can take a lot more risk at a much younger age because you have such stable income. You have big tranches of cash coming in that if you save and invest those, then you can feel pretty secure about having a mortgage payment way earlier in life than people that are not in the military, especially in your specialty with the amount of income you guys earn.
That's one of the biggest reasons I wanted to do this for our community is because we are, like I said in the beginning, we're a different tier. Like we come into a lot of money relatively soon. I mean, you nailed it on the head. Like it's life-changing if you can plan and do stuff with your money when you are 20 years old.
Oh yeah.
When you're 35 and you're like trying to play catch up.
Yep.
Or later.
Qualifying for the payment too. I mean, because a lot of, different branches, or if you're just, not in a specialized kind of career in the military, there's a lot of people in the military that won't qualify to buy a house in most markets that they live in because their pay isn't high enough. I mean, now with where interest rates are at, there's a lot of parts of the country where you have to make at least, 50 grand a year to buy anything, which when I started doing loans 14 years ago, I was doing loans for people that in markets where they were making 35, 40 grand. And that was kind of the bottom as far as qualifying. And now that number shifted up. And there's a lot of places like California or New York or Texas, even some parts that, you got to make $120,000 household income to afford the median house, which has gone up like almost 100% since the pandemic.
Yeah.
So
super
you guys
crazy.
are just, the fact that you can qualify that early in life, have the income to really comfortably afford it, and you have large bonuses coming in to make you even more secure is all a really big deal.
Last few things. We don't have to like go in depth in these questions, kind of like just kind of quick fire type stuff. If you in the comments, like down low, if you want to learn more about it, just, hit us up in the comments. And in our next episodes, we'll bring that up and we'll go a little bit deeper. When it comes to rental income, so say your first house that we talked about in prototype, you bought a house, or if you were a stat pickup, you bought a house, or you first station, you bought a house, whatever, moving to your next place, and you decide to rent that property and go to the next one. From what I understand, using rental income as a income for approval for the next house has changed. Is that correct? Could you explain that? Like quickly?
Yeah, it has. So kind of a bummer, but it's also probably a good thing. It used to be before this year, they changed it officially, I believe, in January was the date. Might have been end of December, but they changed how it worked. So it used to be like a year ago, if you were to go buy a duplex, we could use the estimated market rent. So let's say the duplex is, $400,000. The market rent is $2,000 each side. So you would live in one side, you'd have a tenant in the other side. We used to be able to use the $2,000 that your tenant was going to potentially be paying you to qualify you and use that income. Now we cannot do that unless you have a history of being a landlord. So like to Justin's scenario point is, if you buy a house, rent it out for a year, and then you want to go buy a duplex, because you have a history of being a landlord, we can then use the market rent on the new duplex. But before, we didn't need you to be a landlord for a year. We could do it anyway. So that was the big kind of change. Like I used to encourage people all the time, like buy a duplex, because, if your income's not that high, we're going to qualify for a better, more expensive property because we can use that rental income. So that's still the case, except for you have to have proof that you have been a landlord previously.
So that's something to keep in mind if you do want to get on that multifamily train.
Yeah.
It's a significant difference being able to use
three,
like if you're getting a quadruplex somehow, if you were able to find one in one of the places we're stationed, and using all three of those as rental income, you can go from like a $200,000 being able to afford it to, I don't know, like $800,
like
$1 million, something like that.
Yeah. I mean, it depends, especially when rates get lower, like as long as if it's cash flowing, you might need to show like basically no income from yourself. So
yeah, that'd be awesome. To go back in time. We don't need to, I gotta stop talking about that. All right, next thing, interest rate reduction loan. This is something I do want to go over in our other podcast, so we will go into this deeper, but just really quick, just talk about what that is.
VA EARL is what we call it, which is an acronym. So interest rate reduction refinance loan, tongue twister. So that you can use as many times as you want. You do have to be in a VA loan currently, but basically what it is, it's a super easy, very fast way to refinance out of your existing VA loan into a lower interest rate. So you do have to lower your interest rate by at least 0.5% in order to qualify. But, for instance, like rates are around 6.25% today. Hopefully the mortgage gods are good to us and rates are in the mid to low 5s in the next 6 months to a year. So if, we would go, okay, great. You're at 6.25%. We can get you 5.5% today. That's going to save you whatever, $200 a month, depending on your loan size. And we would basically send you DocuSign paperwork with your new interest rate, your new payment. You'd sign that, and then about 14 days later, we can close. No income verification and no appraisal are the two big, huge benefits of that, because those are the things that usually kill refis, is your job changed and you don't qualify because your income's different, or your house doesn't appraise or has an issue with the appraisal, like, there's a water stain in the ceiling and you're no longer, your house has to get an inspection, etc. So we don't have an appraisal, we don't have income verification. So you basically sign some paperwork with your new payment on it. 2 weeks later, you close, and then you skip at least one, sometimes two mortgage payments following that, and then move on. And then do it again in 6 months if it goes down again.
It's such a cool product. Everyone knew, nobody knows about this. Like, you were the first one that brought this up to me, like when I was going through your presentation.
Yeah, it's so
in
crazy.
Skillbridge. Bro, how many people during the pandemic would have just totally raked in the cash after doing this? Man, like
Well,
if I could have refinanced
yeah.
my, like at the time, when I bought a house, I had a house during the pandemic at like, I don't know, it was like 5.8% or something like that back then.
Right.
When I bought it in 2017. Like if I could have gone down to a 2%, 1%, 1.5, whatever the heck. Like, are you kidding me?
Oh, yeah.
That would have changed everything. It would have been crazy.
I know. I mean, I don't know. I'm so shocked at how a lot of people are just not aware of that. And I'm just like, it's like the greatest loan program ever. And there just must be no information in the military about it. I'm not sure. Because I had a gentleman a couple weeks ago who was selling his house and he was at, a pretty high interest rate. And I'm like, oh, you never used your EARL, And he's like, oh, I didn't know about that until your presentation. And I was like, oh my gosh. I'm like, you probably could have saved like $300 a month for the last 2 years. So.
Yeah, everyone should have done that back then, man.
Oh yeah, we were doing a lot of them. Yeah,
I mean,
we were doing. Of course,
I was hearing all sorts of people were like refinancing back then that I knew of, but not the EARL. Like I didn't like they were like people were doing cash out refinances or whatever. But still, even though like everyone should have done it, I don't know why I didn't do it. Like I'm
well,
an idiot.
Well, no, I mean, it's just, it's not what you do for a living. I mean, there's a lot of people out there that, that talk to me like, oh, I don't need to refinance. My payment's fine. I'm making my payment. It's like, well, you're making your payment. Why would we not lower your payment by $300 a month? I mean, you can make a lower payment, and pay off your house in the same amount of time.
Yeah. Now, with that, does the loan term change? It goes out to 30 every time or 15 or whatever?
It does reset. However, your payment is only the minimum payment. So what I always do for people on EARLs who, are cognizant of that is I do the calculation, say, hey, if you were to continue making the same payment you make now, let's say you've been in your loan for 3 years. Okay, so you have 27 years left on a 30-year. If you keep making the same payment when you get your statement now with the lower interest rate, now instead of 27 years, you're going to pay your house up in 19 years. So, or we can do a calculation. I can say, hey, if you want to still pay your house off in 7 years, okay, great. When you get your new state, just make a $50 extra payment or whatever the math works out to be. So
I guess it would be different for those people that are like already like 15 years into a 30-year loan. But most of us were buying a house because we're stationed here for 2 or 3 years, 4 years at the max. That's not that big of a difference. 3 years difference. And like you just said, like the math works out where you can just make that up easily.
Yeah. Your term is just your minimum payment. So you can set your auto pay to be $100 more, and the interest is the same as if you were in a 27-year loan or if you were in a 15-year loan. There's no difference in total interest paid as if you make the same payment. The term just dictates what your minimum payment monthly is.
All right, next question, because we went over the time for that. Yeah. Next thing is, we touched on it, but a lot of people have a lot of questions about this. You can have more than one VA loan at a time.
You can.
Right. I want to make sure that we are set that clear because I don't think we maybe put it in set in stone earlier. But you can have more than one at a time.
Yes. And you may not be able to have more than $1 million house at a time, but you can definitely have more than one VA loan at a time.
Right. So more than one VA loan at a time. Just stay within your entitlement. Or if, like you said earlier, you might have to put some money down because you're like short on your entitlement for your next house, or it just depends on the price of the houses you're buying or whatever. Like. You might be a little bit over and you can make that up.
Yep. It gives us 2 numbers, the no down payment number, and then if you put money down, here's the maximum loan amount the VA will allow, etc.
Then last question, you kind of mentioned it earlier, but for those of us that are planning on, or for whatever circumstances, we are either overseas or on a long deployment, for whatever reason, we're not in the States, we're not stateside. Can we go through the process and buy a house? And just real quickly, how does that work?
Yes, you can. So if you're deployed, we can use your active duty military income. We have a really good network of realtors from Allegiant vets. That's kind of been a necessity for us to have a good network of realtors in, basically every state. So, we can find a realtor that can start sending you listings, do video tours, etc. And then my team and I will work with you on getting the pre-qualification done. And then the realtor and you would put together an offer, make the offer, and then once your offer is accepted by the seller, then my team would work on getting you closed on the loan. So we do a really good job at ironing out any kind of potential issues before you go into contract. We really don't have a lot of surprises. I don't like to have surprises or have people not qualify. There's some people that throw stuff against the wall to see if it sticks. And then there's people who don't want to have anything not stick. And my team and I are both in that category of like, we will maybe take a day or two longer on your pre-approval letter to get it done, because we want to make sure we've gone through every possible scenario so that when you go into contract, okay, we're going to close for sure.
Yeah. Nice. I mean, I know it'll be tough, especially for us. I'm a submariner. We all know that. I'm a submariner. It'd be kind of tough communicating with people because like you don't have like internet all the time, and it's like hard to talk stateside. But for those of you on aircraft carriers, and especially for those of us that have, a spouse or a family member that might be, I'm sure you might have probably seen like a power of attorney type situations.
We've a lot of power of attorney. Mm-hmm.
So
dads or uncles or somebody in the family that is, okay, you're in charge, find me a house, here's my parameters. And some people like leave it up to their dad or whoever to find it, or their spouse. And just
plan for it ahead of time, make sure you got all your P's and Q's done, like you know what you want to do, and then have them do that. So that's definitely an option. So that was the last question I wanted to ask. I want to urge all of you that if you are in a point in your life where you want to maybe look into a VA loan or have any questions about mortgages for a VA loan, like your current situation, like what's the future, no matter what step of your military career you're in, or if you're a veteran, I really want you to reach out to Jon and the people on his team. Like they're going through a lot of time and effort helping our military veteran community. I guess, like we said earlier, hundreds of people a week they're talking to, taking time out of their week to educate us, help us through our transitions, and get us going in the right direction. So if you can really, like, I urge you, reach out to Jon. We're gonna have Jon's information linked in the show notes, in the description, in the video, YouTube video below. Like, reach out to them. They can help you. They're gonna have the answers, and they're not gonna give you any BS, right? So they're going to be straightforward.
Yeah. I mean, we even check people's paperwork all the time. I mean, a lot of people, have heard of Veterans United. A lot of people have worked with Veterans United, and, we check their loan estimates all the time. And, there's a lot of times where we say, hey, your deal is great. If you're happy with your loan officer there, more power to you, and go ahead and work with them. But we at least check their paperwork to make sure there's not funny business. And, there is a lot of inconsistency between, one veteran to another, which is kind of crazy. Is some veterans, they're charging origination fees. Some veterans, they're not charging origination fees. So, there's a lot of inconsistency. We basically, at our company, treat everybody the same every time. I mean, we cover your appraisal cost all the time. And then we also don't charge an origination fee, which is basically an extra fee that we could charge. A lot of people get away with it and do it, but we don't do either one. We don't charge an origination fee ever, and we also, anybody associated with Allegiant Vets, which I would also extend to Navy Nuke, is we're going to cover your appraisal costs, which, depending on where you are, is going to save you between $800 and $1,000 out of pocket on a purchase.
For your company, you guys can, does it matter where us Navy Nukes are, where we're trying to buy a house, like the state or anything? Does that matter?
No, the only states that we, don't have guys in it, or licensed guys in, would be Alaska or New York. However, we do have two referral sources, two other mortgage brokers that are in those states that we refer to, and the deal with them is they give your guys the same deal that we would give them. New York's just a nightmare unless you're in the state of New York. I mean, even if you're in the state of New York, it's a nightmare. It's like ridiculously expensive to get licensed, and like there's banks that won't even get licensed there because they're just like, forget it. And then Alaska, just appraisals are really hard if you're not there, because there's just not a huge population. So that's kind of the two reasons we don't have those licenses. So any other state, either myself or my partner Marcus will be on future episodes. One of us would be the ones either facilitating the loan in those other states besides Alaska and New York.
Again, go down the show notes, visit them, put a time on their calendar. If you have questions, ask them whatever you need to ask them, because I want to make sure that we take care of them, because they're taking care of us, right? So, Jon, I really appreciate you being on the podcast today.
Thanks, Justin.
Yeah, of course. We're going to have future episodes. There's plenty to unwrap when it comes to VA loans and how to use it, financial literacy, and how to invest your money sooner rather than later. And we'll have other like real estate related professionals come on too, so that we can just kind of have a group setting to really understand what's the best tactics and strategy to use when you're trying to figure out your real estate journey. Thanks, Jon. We'll see you on the next video. Stay tuned. It's coming out soon.
Thanks. Appreciate it. See you next time.